Welcome back, Watchmen. Let's analyze. The chart is stained with red today, a painful sight for those who only watch the surface. Beyond the veil, however, a different ritual is being performed by powers hidden from retail sight. The pre-market session began under the light of the moon at the 70-cent mark, where downward momentum immediately ensued. A rebound occurred at 65 cents as the first glimmers of dawn appeared, followed by a sharp rejection from the 60-cent level that we started at. Price found a temporary footing at the 68-cent line, but suffered a second rejection from the 70-cent wall just before the bell. It chimed across the battlefield at 69.5 cents, and the descent resumed towards the 66-cent level. An attempt at a rally was repelled at 69 cents, leading to two shallow bounces from 67 cents, and two rejections from the 69-cent resistance. Following a brief period of consolidation, the downward momentum resumed from the 69-cent line. As the lunch hour grew nigh, the price became pinned at 65 cents, as all sell orders were absorbed by a mysterious force. The sun approached its heights, and a surge in selling pressure triggered a collapse from 65 cents, plummeting until a high-volume bounce struck the 61-cent depth within the daily demand zone. The afternoon was a series of skirmishes. A rejection at 67 cents, a bounce from 65 cents, and another rejection at the 66.5 cent mark. A final stand at 65 cents held against the 66-cent rejection as the shadows lengthened, bringing the session to a close at the 65-cent line. While the surface remains crimson, an unseen hand has moved to secure the hoard. An unknown whale absorbed the residual liquidation from State Street's exodus of their XSD position. This transfer of power occurred as the demand zone stretching from 64 cents was tested and validated. The defense of these ancient boundaries suggests that the floor is stronger than the daily candle reveals. The masses see only the blood on the floor, but the watch knows that the gate has found a stronger lock. Let's move to the watchtower window so we can view the charts with better accuracy. Oh, that's the wrong time frame. Alright, so looking at the daily. Alright, it's a pretty ugly sight, big red candle here, but there were two very distinct things that happened that have me very bullish for the coming days. One of them is this rejection from the demand zone that I've been telling everybody about. I remember specifically announcing that people did want to buy it down here, and by those people I meant institutions and the big money players, which is pretty much exactly what happened. We'll see the rest of that when we zoom in at the other time frames, but today was not as bad as it seemed. And I know I've been saying that the last several days, but it really just wasn't that bad at all. Let's go ahead and dive a little deeper to the hourly. And let's trade out this SMA. This is the 50-day. Let's trade it for the 20. It's sitting right here at 71.5 cents. That's like a mini boss that we're gonna have to face. But notice that we have this supply zone that I marked here. And if you watched my Guardians of Earth and Sky video, you can see I marked it just as I showed you, from the top of the wick to the bottom of the body. And I expect that we will see a reaction once the price gets back to this level. Well, only time will tell. But look at this beautiful wick. It came right down here and it came right back out. We didn't get the reaction that was ideal coming up here, above this supply zone, but it didn't stay here. It didn't hang out. It's gone. It came down and it left. Now that's not to say it won't come back again, but I really doubt it, based off of the strength of this and the strength of the other bullish factor I was talking about. We'll see that on the 5-minute chart. But it also doesn't invalidate this zone. This is still active, even if we have to come back down even further, down towards 58, 59. It's still valid, and we should still see some more action coming out of it. Now let's go ahead and zoom to the 5-minute before we do candle of the day. Oh, not 6 months. What is this? 5 minutes. There we go. Okay. Alright, so the other bullish factor I wanted to point out was this half an hour of completely flat price action. If you add up all the numbers, we're just right at 5 million volume here in this half hour, and price didn't move not a cent. Now, I was watching the time and sales chart and order book while this was going on, and it's definitely not because there was no trading going on. It was very, very active. Then what this signifies is that somebody, more than likely an institution, because retail just doesn't set a 5 million share buy order, and so somebody set a buy order for about 5 million shares at 65 cents, and it absorbed every single sell order that came for a half an hour. Now, more than likely what this was, the selling part of this was probably, and I could be wrong about this, it was more than likely residual sell-off from the State Street exiting their DVLT position from the rebalancing that happened Friday. It's very possible that they couldn't get rid of all 10 million of their shares on Friday alone, and they had to figure out a way to dump it before the end of day today. So once they noticed that there was, liquidity going on at 65 cents, somebody at State Street was probably like, okay, this is our chance, dump the rest of it. Now, I don't know exactly if somebody had that 5 million share order, but maybe they just bought 5 million and they were done. But once the sell orders started to run out here at the end, I guess on the order book it was kind of ridiculous, because I was rooting for them all to disappear, and then right at the end they almost tripled, and they overtook whatever was left of this buy order and shot down into the demand zone. Now, everybody says, oh, well, the price capitulated. But no, because in this 5-minute candle was another 3 million volume alone. And then notice that there's not much of an upper wick here on the top of this, which means that this candle was mostly buying pressure. Now, just like this one was mostly selling pressure, this is probably whatever was left right here. And the sellers ran out of steam here, and the buyers took this out of the demand zone. Notice that, see this little tiny red candle right here? If we mark this, there wasn't really a lot of volume in this candle, but structurally it looks like a continuation zone. And if we were to mark it, we can see here that this wick comes right down into it, and price goes up some more. So I didn't mark that because there wasn't really a lot of volume, and it's so close to this demand zone that I didn't really feel it was prudent to mark another zone right here. But somebody wanted these shares, and somebody wanted these shares. Somebody with a lot more money than any of us have. And when the money goes somewhere, you follow it. Now, is it possible for price to come down further? Of course, anything's possible. It's the market. It always does something that we don't expect it to do. But mathematically, probabilistically, is that the right word? Oh, whatever. It's not likely to happen. Now, with all that out the way, we can go ahead and give this guy the honor of the candle of the day, because it was a very bullish candle, 3 million volume, and it did exactly what it was supposed to do. It came down here to price, and it shot right back out. And it said, no, I'm not standing down here. We're not supposed to be here. We're supposed to be up here somewhere. Let's go. And it shot right back out. Also, another thing, notice that 65% line, we got 2 more bounces from it for the rest of the day. It acted sort of like some kind of floor for price later on. Once the recovery was complete, came back down, boom, bounce, came back down, boom, bounce. And then it tried to close below, but nope, didn't happen. So you know, and it's not solid. Yes, of course, price could come down here again, but it's only 5 million shares is a lot. Somebody was like, okay, well, State Street's closing their position, I'll take it. Now, given that I've shown you this supply zone here, let's go ahead and back out to the hourly so we can do our forecast. I'm not really sure that we're quite done. You know, I'm not going to call it a reversal just yet, but I do think that we might see a little sideways downwards action and then retest of this supply zone. And if we can get enough volume on it, we'll even retest this this 20-day SMA here. Now, if we have enough volume, we'll break it where we can test the 50-day, which is going to be a little higher than that. But it really all just depends on volume. Now that we don't have any more, we don't have another ETF that's dumping us. We don't have any more shady banks that are dumping us. We don't have most of the retail has been shaken out from, you know, following with all their fear-based trading that they've been doing from the drop. And yeah, if we can see some good volume, we'll get some height on these candles tomorrow, or through the rest of the week. Now, on the downside of things, it is 100% possible that we come back down into this zone to give it another test and see how strong it really is. If we do that, I don't expect the top here to give us another bounce, because somebody is already, whatever orders were here have already been gone. Well, that's not to say that new orders won't form, but I believe that if we do drop down into here, we could possibly see that 60 cents, maybe 58, 59 cents before we come back out again. So we're not ready to call the reversal just yet, but it's coming, and it's coming soon. And they got something up their sleeve with this $1 billion shelf. They're planning things. A lot of people might be mad, saying Nate's a scammer and all this, but it's they'll see. Everybody's gonna see. All right, folks, that's gonna do it for tonight. So we can go ahead and close out. Remember to smash that like button and ring the closing bell to subscribe to the Night Watch. We have another vote going on in the community page for next weekend's class, and it looks like institutional investment strategies is winning. This is a very important one for people to know, because not all institutions are created equal. I made a post regarding this on Reddit a couple of months ago, and it was very well received. It explains all the different types of institutional strategies and what their purpose is, what their goal is, how they go about achieving that, what kind of things they look at to trade, and it'll help shine a lot of light on what's going on with institutional trading and what we should be looking for going forward. Alright, folks, that's going to be it. I'll see y'all tomorrow, and until the end of all things, the Night Watch stands forever.